Hello and welcome to the last video for Chapter 5, Itemized Deductions. This video is going to discuss lines 21 through 26 or 27 of Schedule A, and this is the job expenses and miscellaneous deductions area. Okay, usually the number one reason you would use this area on line 21 is the area where you have unreimbursed job expenses. All right. So, for example, you used your car for business reasons. All right, and you can take a deduction for that at 53.5 cents a mile, minus any reimbursement that was paid by your employer. Okay, so a lot of times employers will reimburse you like at 30 cents a mile. All right, so you would take the 53.5 cents minus the 30 cents, and you get to deduct 23.5 cents a mile for every mile that you use for business purposes. Okay, again, this would not include commuting mileage as we discussed in Chapter 4. All right, I have clients that deduct their mileage. Okay, I've had some who have said, well, Rob, I want to deduct my laptop, and I'm like, okay, was it provided by the employer? And they're like, no. And I'm like, do you have to have a laptop? And they're like, yes. I go to clients' homes all the time. I have to have a laptop with me, and my business will not pay for it. Okay, that should be a business deduction, and anytime you take any of these deductions, of course, you have to take it times the percent of business use. So, if that's the only laptop you got and you spend part of the day on Facebook, that wouldn't be 100% business use. But that would be included in that area. All right, so, another one would be meals. All right, you take your client out to lunch, and you discuss business, and it's not reimbursed by your company. Or you go golfing with your client, and you decide to pay for the for the greens fees, and your company doesn't reimburse you, so it would be deductible in that area. Other things included in there would be parking. If you have to park your car, you're in a large metropolitan city and you got to spend $25 a day to park, and your employer doesn't reimburse you for that. All right, that would be deductible in this area. Okay, if you do this, okay, what you would do is you would use Form 2106 or Form 2106EZ to put all of this information on there. Okay, and then that any amounts on there will flow through automatically to line 21 of Schedule A. Okay, all right, tax preparation fees are deducted on line 22. All right, and generally what I do if I prepare a return for somebody, and I try to use the tax prep fees wisely. So if I prepare a Schedule C or a Schedule E for them, I might put some or all of my tax prep fee on that, depending upon how much I charge for the return and how much I charge for that form. Okay, again, you try to get as many expenses legally on, so that it appears somehow on page 1 of the of Form 1040. Okay, and also if you have a business that's a sole proprietor, the more expenses you can put on a Schedule C, you're going to save your client roughly 33 cents on the dollar for every expense you can legally put on Schedule C. Keep in mind also that in the state of Indiana, that remember that federal AGI is line 1 of the Indiana return. So anytime you can get the AGI lower legally, you're not only going to save taxes federally, but you're also going to save taxes for state and county income tax also. All right. Okay. Other expenses that would fall into this area would include things like safety deposit box fees, assuming that there is something in the box that can produce income. All right, the union dues. All right, would be recorded here. I mean, you can put the union dues on line 21, or you can put the union dues on line 23. It really doesn't matter which lines you put them on, as long as they appear on lines 21, 22, or 23. Okay, and there's a reason for all this, because if you look at line 24, you have to add lines 21 through 23, and then on line 25 you have to enter the AGI. Okay, so you enter the AGI on line 25, and then you take 2% of that AGI and put it on line 26. So the bottom line is that, you know, again, if you've got a client that has $80,000 of adjusted gross income, if you take 2% of that, mark, that's $4,000. All right, that $4,000 goes on line 26, which means that lines 21, 22, and 23 have to be larger than $4,000 in order for you to deduct any miscellaneous deductions, okay, of that type. All right, that's what we call the deductions subject to the 2% floor. All right, the ones that I just discussed. Now, there are some that are not subject to the 2% floor, and the primary one is gambling losses. All right, gambling losses are reported on line 28 of Schedule A, and line 28 is not subject to the 2% limitation. Okay, now this, again, I allude back to a comment I made to you in Chapter 2. All right, if you win anything gambling, and you receive a 1099, or I'm sorry, a W-2G for that gambling income, that gambling income is automatically reported on line 21 of Form 1040. All right, the losses are reported on line 28 of Schedule A. They are not netted together, generally, okay? All right, so again, it's very possible that somebody will have to claim their winnings, all right, but not necessarily claim their losses, because if they cannot itemize, all right, they cannot claim their gambling losses, because gambling losses are an itemized deduction, okay? Other deductions that you would take for employee business expense also, you know, I allude back to a previous chapter where I talked about the church on Sunday rule. All right, so again, nurses can deduct their uniforms. Anybody that has to wear a uniform, you know, at work, and it's not reimbursed by the employer, you would be able to deduct that on line 21 of Schedule A, okay? And again, certain things you're required to have, like safety glasses, safety boots, all right, you know, some kind of a, you know, coveralls or something for your job that is not covered by the employer. All right, I've had guys for years, you know, they would write off, you know, $2,000–3,000 a year in tools. All right, for example, that they were, you know, ACE certified auto mechanics. All right, and they would use a certain type of tool, like a snap-on tool, and these things are very expensive. All right, and you know, the place that they worked at, you know, they would never reimburse them for their tools. Because the tools belong to the employee, not to the repair shop. All right, so, you know, I would tell them, okay, bring in your receipts, all right, and we'll deduct those tools on line 21 of Schedule A. All right, potentially, of course, deduct them on Schedule A. All right, so that culminates in all of our discussions now of itemized deductions, and that ends this video for miscellaneous deductions.